All right, I think that we're recording now. It says we're live. Hi, Dave Knight here, 123daytrade.com. Thanks for watching. Thanks for being here. Today will be futures day trading beginner's course lesson number 2. Today's going to be how to determine the trend. We're going to give about a minute or so for the last stragglers to come on in, and then we'll get started. So if you're watching this video as a recording, just fast forward about a minute or so and we'll be starting our lesson. All right, so let's give about a minute or so and then we'll get started. Now in the meantime, let me say this though. Here is the last video that I did, futures day trading course beginners lesson number 1, and you can go and I'm going to make a playlist of this futures day trading course. And we're going to use that. So there's going to be 4 lessons inside this course itself, the beginners futures day trading course, or beginners course. Lesson 1, we went over some preliminary stuff. We went over some of my background, went over what makes me tick as a trader and all that good stuff. But we also went over the bar charts, and we also started handling the candlestick charts, and we went over some of my favorite candlestick formations that I like, and I gave you some homework to do along that way. You know, we talked about hammers and we talked about shooting stars, and hanging man not so important, but the 2 most important concepts as far as the candlesticks go of last week was the shooting stars and the hammers. All right, so let's give about 30 more seconds and then we'll get started. So this was the first video that I did on the lesson, being the day trading beginners course lesson 1, and lesson 1 was on going over bar charts and candlesticks, basically looking at the price action. All right, so we will get started in about a minute, 30 seconds now, maybe 20, maybe 25 seconds. Be right back. Let me put this Q&A in here while I'm here. We'll enable the Q&A, and I'll just write a little message. Hey, how's everyone doing? Okay. Oh yeah, you can see this. Yeah, the question came across. What do you have? Your hat? And I said, this is where I was over the weekend. Yeah, I was at the Tennessee game. Went to go see Tennessee play. Oh goodness, North Texas. I think they're, yeah, North Texas. They were just a cupcake team for Tennessee to play for homecoming. But we got together as a family, me, a family unit, and when we all get together now with my brothers and their sister-in-laws and the children and my grandmother, there's 14 of us all together now. There's 4 in my family, and then I guess if you do the math, there's 10 extra outside of that. So one of my brothers has a family of 5, 3 kids. My other brother has a family of 4 with 2 kids, and we have a family of 4 with 2 kids. My dad's passed away. Will be 12 years in January of this year. Now, this is the first time that we've been back to a Tennessee football game since he died, you know, which was, and then we went. So it's probably about, my son was in the womb, my oldest son was in the womb when we went last. And that was the last time that we went to a Tennessee game. So my son is almost 13. He's actually was born on New Year's Eve. My oldest, and if you go back and look at the opening video of video 1, you can see some pictures of my boys. Oh, I put this up inside the members area. It's specifically in beginning lesson number 1. It's crude oil power top 10 trading maxims. You might have a copy of this. I know that it was one of the favorite things that I did back in the day. It was this was updated from 2011 to make it 2015. Crude oil power top 10 trading maxims, and there's my big strong tiger there, which actually bought the rights for it. So that was one of those things I bought. And then there's the rules itself that you can copy. You don't need to pause it. You can just go to lesson number 1. It's inside there. And if it's not, I'm pretty sure I put it in there. If it's not, it'll definitely be up there today, later on today. But I'm almost positive I put it into the members area. Okay? All right, so let's get started. Before we get going, I wanted to show you where you can find what I'm looking at. So what I want to do is screen share my screen 1, and hopefully you guys can see my screen 1 now. I should be presenting to everyone. And I want to pause the music behind in the background, and I want to pull over my website. Specifically, I want to show you how to get into the members section. Pretty simple, I think. Hopefully it's simple. It's, I'm working inside there diligently to update the data. So you just click members. And specifically what we're working on right now is called Futures Day Trading Beginners Course. And there's will be 4 video lessons. And you just click this and you'll get inside of it. And this was lesson number 1 that we just did. Start your first lesson right here. Click this. Click anywhere in there. Hello. I'll get started. There am I talking off of the YouTube. The Futures Day Trading Beginning Course Presentation PDF. Yes, I did put it in there. Crude oil power, top 10 trading maxims. So let me hide this sharing button there, because I am sharing. And I've got my coffee here that you can't see me drinking. But welcome, 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 welcome. So let's get rolling. So let me pull up the our lesson here for today. Now, if you go back to lesson 1, where we left off last was on the candlestick chart. And what we're looking at right now is the candlestick chart, and we're looking specifically at the daily chart. Now, how do we determine the trend? So that's where we are right now. All right. Okay, great. So first off, you can see red versus black. I mean, the very first thing that you can see on the daily chart, at least it should be jumping out at you, is that there's a lot more red bars on this chart than there are black bars. Now, the black could be green, or it could be any color that you want to make as an up bar, but the red is signifying a down bar or a down session. Specifically on the day trading chart, what this means, if you see red, is our open closed low, opened higher than the close. So the close was lower than the opens, what I'm saying. That makes the red bar. The black bar is the reverse of this. When you see a black bar, the close is higher than the open. And as a review from last week, remember that we talked about the shadow. The shadow is the thin line, right? So the thin line. And then the body is the big line, or the area that's wider. So in a candlestick chart, when you see the body, meaning the thicker part of it, like over here, you are looking at the price action that the open and the close fills in, and that changes as you would change your time periods that you're looking at. So that is how I start with. Now, the very first thing that, I mean, it's great to look at this. You think, wow, look at the dailies. And you're looking at the daily chart, and then you go looking at the hour chart. And then the hours look like everything's going on a down pattern, which it is. And then you go and you look at the 15-minute chart. Now, the 15-minute chart showing you something a little bit different, right? All of a sudden, you see over here, off of November 18th, which is actually today's trading data, and the market is trying to make a move to the upside, right? Now, by the way, we have switched contracts from the open interest has moved from December to January. We will be dealing with January's contract next week. This week, the daily chart, if I look back at the daily chart here, I'll show you what I'm talking about. See the day, well, this is the 15-minute, but if I go back to the daily chart, and if I pull up January's chart, which is now the active chart, what we can't see here is we notice that it's not filled in yet. So although we have rolled to the January chart, and that's the active chart, the December chart is still holding the data on the daily. So this is going to change in the near future. So anyway, so this is 1 week's worth of data. Let's go back to the day. So here's your day. And then if I show you January, you can see that the data is kind of like not all there yet. So once this becomes the active chart, now in the crude oil market, the active chart changes normally the third week of every month. If you look at your calendar, today is November 18th. This is kind of early for the contract to be moving from. Usually it moves Thursday or Friday. The new trading chart ends up being the next month out, which right now we just finishing up December's trading chart, and now we're looking at January. Okay, so that's a little bit of information as it relates to the futures market. So as we're looking at futures trading, you're going to have a contract, and each contract has different pricing, and that pricing determines what your value is for that particular time period. The active contract is the contract that's being traded into the future that we're looking at, that will be settled in the future. So right now, the December has moved from, even though we're still in November, December was the active contract, but we're moving into January, which is the next month out. And we trade basically 1 month out to that. That's kind of how it always moves. It's a futures chart. So it's kind of confusing in the beginning. Just trust me, you'll know when the roll is, because you'll start seeing on your price action and then your dome, your price action dome, you won't see as many ticks on one side as you will see on the bid and the offer on the other. So that's kind of how you can start to determine. Now, if you're in Top Step Trader, they tell you. So that would be a great place to begin and to start with. If you're looking at the just starting at trading, you know, a good place to be is at Top Step Trader, and using the trading room to help you to get better as a trader. So that's kind of where I spent the last year and I guess 3 months of my life, and I would highly recommend it to you as well. All right. So how do we determine trend? So here we are in front of our daily chart. Now, the very first thing that we notice is that we like I said before, when we're going into dailies down to and drilling down to the 15-minute, what we see is the market is making a move, and we see that as we move down, it gets harder to determine what the trend is overall. Are we moving up? Are we moving down? Are we moving sideways? And if we look at the 5-minute chart, meaning you're going down to the 5 minutes, each bar represents 5 minutes worth of data. When we see the bar chart in this case, or in this case the candlestick, you know, what we're seeing is this the bottom? Is this going to be the bottom of the market? Do we know? I mean, how do you determine that? And this is where a trend comes in. So, you know, there's that old saying that goes by, the trend is your friend, and you should always, and a lot of those things go to, you should be trading towards the direction of the trend on most of your trades and your majority of your trades. So you're trading with the trend instead of against the trend. Going against the trend, what does that mean, going against the trend? And what does mean going with the trend? So the very first thing that I would want to add to my particular chart would be a study. So if I'm adding a study to my chart, I've got to find the right one here again. If you click here, anywhere in here, you can say properties or studies. And what I want to add to here is just a simple moving average to start with. So a simple moving average, and we add it. And now you see this blue line come across. Now the first thing that I want to add is the property side. I want to get over here to that particular candle, to that moving average, and I want to change it to periods. So in this case, the first thing I want to see is what is the 200 bar moving average, and if I want to change the color, I can. So let's just change it to purple for now. We can change it to any color that we want. I prefer to see it in a darker color. So we can go with this. We can go with anything you want. You go with blue, dark blue, you name it, you can go with it, and you just add it to the charts. And the other thing that I want to do is make the properties a little bit bigger so that I can see it. So line thickness. Whoops. I want to do that to line thickness to the 200 bar. Now this, let me get my arrows out. This is the 200 bar. Now all of a sudden, now the 200 bar simple moving average is what this line is coming across the charts right here that we see moving in and around here. So if we look, the 200 bar moving average right at this point being September 30th is where we see the first time that it crosses under on, and if we look back here, we can see that we had another crossover right in here around February 10th of 2014, and we made a move up for a while, then crested to a high of on July 2nd in 2014, and since September 29th of 2014 we have traded down. So we have not crossed over the 200 bar moving average since that period of time. So right away what we can say by the crossover of the 200 bar and on a closing basis, meaning if we look at this particular area right here on September 30th, 2014, we closed considerably underneath the 200 bar moving average that's going over here. And so from this point, September 30th of 2014, we can say that our trend is down, or we have a downtrend. Now, that by itself is helpful, but a better tool to do is I like to look at one other moving average on my charts, especially on the daily chart and the 15-minute chart. I like to see the 50-minute or 50 add a study. So hold on, I want to add a study, and what we want to add is the 50 bar simple moving average, SMA, once I find it. So we want to add this, and it's based on the close, and we just need to find it. So we go up to properties, and then we go and find it. So here's the one that we just added, and the closing basis is fine. So I want to change it to 50, and I want to change the color. And this, I want to change it to gold or yellow. I like to look at it as a yellow, and then I want to brighten it up so that I can see it on my charts. All right, so now we have another picture of what the market looks like as a daily basis. So if we go back here to our arrow, what we can determine here, and let's add another arrow here, is our 50 bar is telling us, giving us another snapshot of what the market looks like. And what we can see is that our 50 bar is underneath our 200 bar. So this is confirming that we are in a downtrend. Now, if we go back and look, we can see that we crossed underneath right here. And this is another signal. Now, remember, we talked about September 30th of 2014, this bar right here. Let me get another arrow. Based on the just based on the 200 bar moving average, here's where we went under and went to the downtrend, or the market moved and closed underneath that. But the way to really help you determine the overall downtrend as a day trader is when the 50 bar SMA, or simple moving average, on a closing basis goes and closes underneath the 200 bar SMA, simple moving average. And we can see it significantly moves underneath right in this area right in here. So we have a crossover right in this area, and then we are in what is called a downtrend from this point forward. So roughly, if we look at the charts, it looks like right about here. So right about at October 15th of 2014 to say October 16th of 2014, we significantly closed under. And then we have been trading in a downtrend. We got close to coming back here in the June 30th of 2014. We narrowed the gap, right? But now we see that we have widened the gap out again. And we can say that with full confidence that we are in a downtrend. Now, with that being said, current market conditions, we can say with complete confidence that we are in a significant downtrend on the daily chart, because our price action is trading underneath not only the 50 bar SMA, but we're also trading under the 200 bar SMA. So now we have three things that are telling us that we are in a downtrend. This is the downtrend. Now let's look and scroll back to where we had an uptrend. Now, we determine the uptrend to be the exact opposite of the downtrend. So here is our 200 bar right in this area. Here is our 50 bar crossing over right about here. And it looks like our price action right about this area, being April 8th of 2014. Right about there, we can say that we crossed over on a daily basis, and the downtrend became an uptrend. And we can see that this held until this point right here, being the October 15th, October 16th area, where the uptrend failed, and then we turned into a downtrend. And we've been in a downtrend since this point. So the daily chart is one determining factor that helps us determine our trend. As we drill down, the next significant thing that we want to look at is our hourly chart to see what the hours are telling us. Now, our hour chart is telling us that we are in a downtrend again. And we can determine that we are in the downtrend because our 50 bar simple moving average is underneath our 200 bar simple moving average, and our price action is trying to move back above the simple moving average of the 50 bar. But we also see that even our price action on the hourly chart is still trading underneath. But we can look back and see there's times where the price action has been in between the 50 bar and the 200 bar. This is indecision area that we run into, where the market is kind of in that indecision area where we don't know if the price action, if this is where we're going to start seeing some turnaround or not. So like for instance, last time that we crested above it was on November 16th, and on the same day we went down and we on this day, excuse me, we went up over the 50 bar, we went underneath the 50 bar, we moved back up over the 50 bar, and we closed up in here, and then the following day we closed underneath. So there was no strength to this upward movement. Now, as a crossover on your hourly charts, what we can look at is when was the last time, as we look back at that one day being, was it October something of 2014. Well, now we can tell that our hourly charts is giving us a different picture, right? We can see like this area right in here. Here's October 14th of 2015. So about a little over a month ago, we crossed underneath and we stayed under in 2015 until it moved significantly up on one trading session, it looks like. October 28th of 2015, we cross over. On October 30th, it looks like we cross over and we end up having on just this chart itself. So if I add some arrows in here, the hourly chart is showing that we have an uptrend just based on an hour chart. And here we can see our price action has moved above this area, roughly right around here. We moved over and we stayed over since that point, but we didn't cross over until October 30th. Our price action moves up and over, but we don't follow behind with the lines on the simple moving average until a couple days later. And that makes sense because this is based upon 50 bars, 50 closing bars, or 50 closing trading days going back 50 trading days. And the other bar is looking at 200 simple moving average of 200 closing bars going back 200 trading days. That makes up the blue line. So the blue line is telling you that's 200 bars and what it looks like, and this is 50 trading bars and what it looks like. So now we've got another picture of the market, and we can say that right here that the downtrend might be changing. But we see here the hourly chart on November 8th confirms once again the downtrend. And right here, specifically right in this area, is when you have not only the daily chart, but you have the hourly chart confirming the downtrend. And we can see our price action is showing that as well. So from this crossover until right now, this is what 40 or 40.87 roughly right now. And when we crossed over, we were at 45.62. That's a 500 tick movement down roughly, or $5,000 or 1,000, well, $5 down, and each dollar in the crude oil market's worth $1,000. So this is a $5,000 move since we moved over. Now, if we look back here, it's about a $4,000 move from where price action is. So where can we trade it as opposed to the crossover? Well, you got to trade where the price action is, right? So here's our price action, and this is where we're trading it. So, you know, specifically, as it crossover, it looks like this would have been underneath settlement, right in this area would have been a good place to try to attempt the short, excuse me, and try to hold as a positional trader, trying to hold this market a little bit longer. If you're looking at an hourly chart. Now let's drill down. So now we want to drill down to the 15-minute chart. Now we're looking at the market completely different. So if we go back and look at, I think it was November 8th, right? So let's go back to November 8th. And let's see, okay, here's November 8th. And our arrows are where the hourly chart is, okay, where they were, excuse me. And here we are, and we can see that the 200 bar is pretty close to where we were, all right? It just barely moved off of it. And that's because there's more data being represented on the 200 bar moving average off an hourly chart and the 15-minute. It's kind of showing that there's a lot more data, so therefore the moving average isn't moving as much. I hope that makes sense, because there's more data and it's smoothing out the information. Therefore, you would think the 200 bar between the hourly to the 15-minute chart would not move as much as the 50 bar would move. 50 bar SMA would move against on the 15-minute chart against the hourly chart against the daily chart. So yes, you should see more movement as you get closer to the market. That just makes sense. So here we are in the 50 bar right now, and the 50 bar is showing the movement. Now this is November 6th, and I think it was November 8th or 9th that we moved over. I guess it must have been here that we went under. Now on our 15-minute chart, we can go all the way back to right here. It looks like this was the movement behind that movement where we crossed underneath. Oops, not annotation. I don't want that. Let me get rid of that. I want an arrow. So all of a sudden, right in this area is where we see the market moving underneath. Now this day is November 4th. So all of a sudden, now we see the 15-minute chart is showing the downtrend here on November 4th. The hourly chart was showing it on November 8th, wasn't it? Or 9th? Let's go back to the hourly chart. November 6th. Right at November 6th to November 9th. So the 8th to the 9th, I think the 8th would have been a Sunday. Yeah, 8th was a Sunday. And the 9th we actually see, but we see the crossover on Friday, November 6th, right in this area on the hourly chart. And we drill up to the daily chart, and we notice that we can go all the way back to this October area when we see the downtrend. So we've been in a downtrend as it relates to the daily chart since October 17th, October 16th, 15th of 2014. But our last time that we moved into the downtrend on the hourly chart was right here at November 6th. And the last time that we moved into the downtrend here on the 15-minute chart, just have to look back to November 17th. So as we move down in our area, we notice that the downtrend it changes quite a lot, right? So, but let's see here. Let's get the arrows back out. So right here is the last time that we've been underneath, right in this area, at the downtrend. Now, if we go back to our hourly chart and look at November 17th, we're in a downtrend. And we know that we're in a downtrend on the daily chart because we've been in a downtrend on the daily chart since October 15th of 2014. So now we've got 3 trading charts confirming the downtrend. Now we want to go down and drill down one more chart, the 5-minute chart. And we see our crossover right here on November 18th. And we see going back to November 17th, yes, we were underneath for a while. Here's where our 15-minute crossed over. Our 5-minute chart crosses underneath the last time right in this area, right? The area before that being November, it looks like November 17th at 4:25 a.m. or so. And then it crosses back, but look at this right here. The 5-minute moves back over right here, showing that we have some strength in the bulls trying to move this market back right here on November 18th, right? But it fails right here on November 18th as well at 10:20. And right now they're trying to run those prices back up and over. So what we're seeing on the 5-minute chart, what we're seeing on the 15-minute chart is some indecision. And we can see the indecision being shown with the price action, right? The price action is in between our 200 bar and our 50 bar simple moving average. Now, how do you determine trend? I think that gives us a significant area to help us understand how to determine trend. We've determined what an uptrend is. The counter trend will be a trend that's moving against the daily trend. So right now, if we say the downtrend on the daily chart, the daily chart is always going to determine the overall trend. Our overall trend is down. So if you're trading in a short position, you're trading with the trend. If you're trading a long position based on the daily chart, and once again, our daily chart determines trend. So if we take on a long at any point during any time, as long as our 50 bar is under our 200 bar, which we are, and we've been underneath that since October 14th of 2014, we are trading, if we trade a long, we're trading counter trend. So that's how you determine trend in a nutshell. In a nutshell, how you determine trend is based on the daily chart. When you take on a chart, when you take on a trade, you're taking on either trend or counter trend. Trend is with the daily chart. So in this case, we can determine, whoops. We can determine our daily chart is telling us that we are in what would be a trend in this case would be anything that would be selling the market, taking the trade to the short side. Now, the more of these moving averages that you can get aligned with your trading decision, the better your trading opportunity is as it relates to trend. And you can take that to the bank. When you can get your daily chart, your hourly chart, your 15-minute chart, your 5-minute chart, all to go with the trend, then you have a very good trade to take on when you have them all line up. So if you can get the 5-minute, the 15-minute, the hourly chart, and the daily chart all to line up into trend, meaning in this case, as it relates to the current trend that we're in, meaning the downtrend since October 14th of 2014, when you get all of them to go down, that is a more significant trading opportunity to take on with more significance, that is. So when you're basically, it's like aligning the stars in a sense. So you're aligning everything up. And the more of these, or if you think about light switches, is probably the best way that I used to look at it. If you have a bank of light switches that have 3 or 4 light switches on it, if you can start ticking off these light switches, you know, kind of like from off to on, right? So in the daily chart, click, it's on. All right, we're in a downtrend. Now we're looking at our hourly chart. All of a sudden, it's in a downtrend. Click, it's on. Now I'm on my 15-minute chart. All right, it's in a downtrend. Click, it's on. Now I'm down and I drilled down to my 5-minute chart. And my 5-minute chart is also showing a downtrend, let's say right here. Click, it's on. If this right here, say 10:40 a.m., right in this area, at 10:35, let's say, all of them are showing the downtrend. Click, 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 click. They're all up. That gives you even more significance that you're in a very good area to be taking on the downtrend. Now, was this a good trading decision right now? Well, that's kind of where we're going to be going to as we relate to our next lesson. Our next lesson is going to take on our wave pattern. So we're going to start looking at the Elliott wave theory, and we're going to look at lesson 3. We're going to talk a lot more about how to put together the price action with our trend system, with the waves, to help us make good trading decisions. So that's the training that I want to go over today. And I'm going to come off the screencast now. And I'm going to see if we have any questions. So let me find my screencast, screen share, and stop that screen share, which I think maybe I have. Someone can let me know if I have. Okay, thank you. So you should be looking at my face again. So that is how you determine trend. Trend is always, as a day trading. Now this is day trading. This is futures day trading beginners course, lesson number 2. And since we're in day trading, the first, like I talked about at the very first, in our very first lesson, the very first lesson that we had, we talked about we as day traders do not look back any further than the daily chart. So our daily chart determines our overall trend or our counter trend. Right now, let me make this point and let me drill it home to you as best as I can. Since October 14th, roughly October 15th of 2014, so if you're watching this, today is November 18th, 2015. So for a whole year and a month now, in a few days, we have been in a downtrend as it relates to the daily chart. The daily chart has been in a downtrend since October 14th, roughly, of 2014, all the way to today being November 18th of 2015. Now, so any trades that we take towards the trend side, since the daily chart determines trend would be on the short side, counter trend would be on the long side. Until we cross that 50-bar moving average, or that gold line crosses back up over the 200-bar moving average, we will stay in the downtrend until then. Now, if this is a 200-bar and we're going to be doing this for a while, then we have what we call confusion in the market, where we don't know if we're in an uptrend or a downtrend. But when we make a break, which we've been in a break now since, like I said, October 14th of 2014, all the way to today being November 18th of 2015. So I'm trying to just pound this point down as best as I can, that right now, as it relates to trend and counter trend, the trend is determined as a day trader on the daily chart. Hopefully that makes sense. So right now, our trend is down. Our day trade, as a day traders, the short side is the downtrend, and the long side, taking a long trade, would be taking a trade counter the trend. Does that make sense? So in other words, when people were saying the trend is your friend, in this case as day traders, the trend is the downtrend. In that case, when we can take on a short trade with the trend, it has more power behind that than the long side, because as a day trading in the day chart, we are in and have been in a downtrend. So when we can get more of those light switches to click on, the better the overall trade can be as we start drilling down the charts. All right. So Are there any questions? Now, once again, lesson 3, next Wednesday on November 25th, we're going to go over waves or Elliott wave theory. We're going to look at wave counts. We're going to look at the 1, 2, 3, 4, 5, or the 0 line to the 5, and the ABC correction. We're going to talk about waves and everything you want to know about the beginning part of how you look at waves. So we're going to bring in a little bit more of, and we're going to actually bring over the tick chart for the first time in our discussion as we relates to waves. We're going to start looking at the tick chart and how we use the tick chart to help us start our wave count. All right. That will be for next week on lesson 3. Are there any questions at all before we call it a day today? Is there anything that I can help you with? Anything that was confusing? I think counter trend's pretty basic, and it's pretty simple, the concept. It's just how I determine it, and then so that you can relate that to your information and then put it into your trader's toolbox so that you understand when I'm talking trend, counter trend. You know, now you can go back and say that, oh yeah, the trend is down since, and because it's on the daily chart, or the trend is up because the trend is showing that we've moved above the 50 bars, crossed over the 200 bar on the daily chart. Therefore, the uptrend is the trend. Now, that's how you can determine trend. That is how you determine trend. Once again, is based off the daily chart. So that's how I always, so if I ever say trend and I go, I'm taking a trend trade or whatever, yeah, I might be looking at the tick chart as the trend at that point, but the overall trend is always based off the daily chart. Okay, so that's it. That's my story, and I'm sticking to it. That's my 2 cents that I'm going to stick with that story. Are there any questions? I don't see anything right now. It seems like we might have done pretty good today. I don't see anything. All right. Well, let's see here. Yeah. I do have one question. Yes, this is on lesson 1. Like I said, you get the top 10 trading maxims. It's there. Just pull up the lesson 1, go into lesson 1 in the member section. You might have to sign up to the free members area. So how you get to that would be going into the members, and if you click, if it takes you to the free members, right now we're working on this futures day trading beginners course. If it takes you to the free membership, then you know you need to sign up to the free members area. Get your email, put in a valid email, put your email in, and go get your password, and then you can come up here, or you can click here to free membership. You sign up here to the free members. You put your email and your first name. You click free membership. It sends an email to your email. You get your information. It'll send a password to you, and then you just go into the login area. So if I would go to incognito, it's going to take you to login, right? And then you'll just go and put your username, which would be your email, and then you put your password in, which is sent to you, and then you log in. And then once you're logged in, it'll take you to the members area. And then you'll be able to come down here and go to the futures day trading beginners course. And since you're a free member, you'll also have access to everything that comes down the left-hand side of this right now, with the exception of the advanced courses. The advanced courses are not on here and will not be on until next year. And this is a specialized course that we will talk about in the future. All right, hopefully that explains that. Any other questions? All right. Let me give you another 10 seconds or so to ask any questions. Looks like we have a decent crowd today. I thank you for being here. I'm not going to call out any names, but I appreciate you showing up and being here. This is Dave Knight here of 123daytrade.com. God bless you. Take care. And we'll see you on our next video, our next trading lesson, lesson 3 on the beginning trading, the futures day trading beginners course. Lesson 3, once again, will be on waves, our wave theory, our Ralph Nelson Elliott and the wave theory. All right. Dave Knight out. God bless. Take care. And we will see you on our next video. Bye for now.